Bryn Talkington taking profits on Lennar on the heels of today's hot inflation report and a double-digit gain in just the last month. Joining us now is SVB Private Chief Investment Officer and halftime investment committee member Shannon Saccocia. It's good to have you on. I mean, you don't have home builders, but you do have a fair amount of exposure. And I'm looking at all of these home builders year to date. They're all down at least 30% for the most part, as are Home Depot, Masco, Trex, among the stocks you own. Why should I continue to own these in the kind of environment it looks like we're heading into for housing?
It's definitely a headwind. I mean, we've had a really nice tailwind from housing really since mid-2020. But I want to maybe take the flip side of Bryn's argument, because I don't disagree with her. I do think we're facing a shortage. But the reason I'm in housing adjacent stocks versus home builders is that I think there's a lot of anchoring going on right now. People are stuck to their homes based on a very low mortgage rate. And granted, nobody wants to pay a 5.5% mortgage rate or more when they looked at the threes last year. But we are going to get to a point, Scott, where we're stabilizing in terms of mortgage rates. We're resetting, and people are going to start to anchor to a different number. In the interim, though, I do believe that the U.S. consumer is going to continue to reinvest back in their existing home, make renovations rather than relocations, and that's why I like the housing adjacent trade here.
Didn't they already do that over the last 2+ years of the pandemic?
They absolutely have. But if you look at things like Trex from a composite decking standpoint, you know, a lot of homeowners got interested in that space based on lumber prices at where they were. Granted, they're down 60%. There's still a meaningful amount of folks that are making the decision to upgrade their home. And frankly, for those that still have discretionary income, which is a lot of them, small purchases at a place like Home Depot can start to refresh those properties and make it a little bit easier for them to get to 2 years from now when they look at the mortgage rates and go, well, I guess it's the new norm, so I could potentially relocate then.
I mean, part of Bryn's argument, too, was today's CPI says more aggressive Fed. More aggressive Fed means higher interest rates. Higher interest rates mean higher mortgage rates.
Right. I mean, well, we know that the Fed's raising rates, Scott. We know that one of the byproducts of that is going to be higher mortgage rates. But if you just look at where we've been historically from a mortgage rate perspective, this idea of affordability, certainly for first-time home buyers, certainly a challenge here. We need supply to go up. We need mortgage rates to stabilize. But again, if I look at Home Depot, Trex, even Pool, for instance, that we own in the portfolio, I'm thinking about, again, this middle-income to high-income consumer who knows they're going to be stuck in their home for a while. And I do think that there's still legs on that trade. I just think about it from a retail perspective, execution-wise. Home Depot, for instance, has done an excellent job being able to build out their e-commerce platform, as well as this is a store you still have to go into. So again, I'm going to pick my spots for quality. I think this is a trade that can remain. And I actually think, to Bryn's comment, in 6 to 12 months, the home buyers are going to be a great opportunity because that shortage isn't going away.
Yeah, Depot down 31% off the 52-week high. Give me a quick opinion on the market here. Suggestions of maybe 100 basis points in a couple of weeks. You buy that at all?
Unprecedented is the new precedent, right, Scott? So, you know, it's a possibility. It certainly is. I mean, I think the Fed really wants to be very aggressive and front end a lot of this activity because they're seeing that it can be coincident with some of the demand destruction plus supply chain improvements based on lower demand. I think that they're going to try to be as impactful as possible. 100 basis points seems a little high. But, Scott, a week ago on your show, people were talking about going back to 50. 75 is in the books for sure. I don't see 100 on the next one.